Good morning. It's a Monday, UPBOptionMillionaires.com, December 15, 2014. Stock futures are rallying off the lows. When stock futures opened for trade, we briefly hit a low and have been rallying ever since. This nasty sell-off we had late in the session on Friday culminated the worst week for the Dow Jones Industrial Average since 2011, so it's been quite a while. If you look, though, we could be nearing a bottom here, something to keep an eye on. Each of the dips have been beautiful V-bottoms. Are we forming a V-bottom here? A sharp snapback kind of action? This would be where we are. We need to get continuation of this move. So that's something to keep an eye on. If the market does indeed continue to rally here, this could be another bottom that gets bought and leads us to new record high stock prices. I was talking about this level here for the S&P 500 futures as possible support. Well, we're under it, so now it's acting as resistance. If we can break over that, that'll look bullish for equities here in the short and medium term. Of course, it's the Santa Claus rally. A lot of charts and information being passed around. Recently, talked about December 12th as being a possible bottom day, and then every day after that into the end of the year, more bullish. And so we'll see if that's exactly what's going to happen. Before I get to GDX, let's pull up crude oil, because the most talked about thing in the economy right now is oil. Down significantly in June. Everybody thought it was going to go to 160. And it's done the exact opposite. But of course, all these oil companies are hedged, and their junk bonds are just falling for no reason. And yeah, but it's something to keep an eye on. When you see something move so dramatically, so quickly, there's going to be carnage left in the wake. And I think that's a lot of what we're seeing in the stock market as far as a pullback. ExxonMobil was actually upgraded this morning, so we're seeing a rebound here. Crude oil futures are up over 1%. If that continues, obviously we don't want to see it get too out of control, but it's nice to see a little bounce there. That'll get us some stability. Let's look at some charts. GDX breaking out under multi-year lows, following in its footsteps, and just pull back from a 10-year chart. I mean, clearly in uncharted territory. FCX as well. I think this chart is 100% broken. I think absent a bounce back over the 26th level, this is going to fall. It's going to become another CLF, WLT. Let me just pull up a chart of those so you know exactly how that's concluded. WLT is now penny stock. Let's look at Apple, because I brought up Apple earlier this week, or last week, and I talked about a pullback was coming, and look at that pullback we have from record highs. The 111 puts we got for 80 cents ended up being an over 200% return thus far. Apple's bouncing a little bit this morning. It's about 2.5 hours before the market's going to open for trade. But you can see as long as we hang below this trend line here, we could look for a move back to 100. If we break out, it's going to head to new record highs. I think that's going to happen over the medium to long term, but I think short term we could see continued weakness. We hit under 109, looking for about 105, and then support here at 100. And let's look at some other names. Caterpillar, talked about Caterpillar this time last week. Talked about Caterpillar when it was over 100. The 95 puts were 17 cents. They went to over $4.50. And a continuation here is at 90. So you can, Caterpillar's up 1% here pre-market, but we're 2.5 hours before the market's going to open. And you can see it found support right here at this level, the former $90 level that's worked in the past, back in the middle of October when we had that pullback. Same kind of thing. So we can see what if this pattern holds true, we have the lower highs coming here. See the lower highs? So the next high is going to probably bring us up to about $98 Caterpillar. That might be something I trade short term if we do get a bounce here for the market that continues throughout the session. Whole Foods, I got some puts here on Friday. Look at this. Came right up to long-term resistance. I love the stock when it was in the 30s, right down in this level. And now up here, I mean, this is almost putting in a long-term head and shoulders pattern. We have a wonderful head, left shoulder, right shoulder. This is setting up for a spectacular move to about where it started this summer, about 37.50. And if it doesn't hold this level, we could be looking at even lower prices. So keep an eye on that. I know it doesn't make sense. Doesn't make sense to me because Whole Foods popping up stores all over the place. But I think a lot of the catalyst here for this move to the downside is because they're kicking Chobani out of their stores. Come on, what's wrong with you? Home Depot hit a new record high last week, continues on its way. This is a stock like 3M I was talking about last week, where I think it's going to pull back. Look at the candle we have for 3M. Home Depot, same kind of thing. And guess what? The options are priced so inexpensively. So I took a little flyer on it. So what they say, the 100 And $1 puts for Home Depot, really cheap. Put them up at the Option Millionaires private Twitter feed. Netflix as well. If it breaks this level here, when the level breaks, the stock will crumble to about 280, and I think even further. So it's something to watch. It was funny when the market was pulling back late in the day on Friday. The carnage, stocks crumbling left and right, blood on the streets, and Netflix didn't budge an inch. I mean, look at the one day here. Look at it. It's like everything's falling to pieces. Netflix is like, hi ho, it's off to, I'm not moving. No, I'm not. Because I had a couple lotto put contracts on Friday playing for a pullback, and that's probably the only reason why Netflix didn't move. So if you had Netflix puts, blame me. It's my fault. Let's look at some other ETFs here. How about GLD? You're down with GLD? Yeah. You can see it again. I think this is going to pull back under the 110, pull back for the 5-year. I'm looking for an ultimate move down to the bottom of this channel, which is going to be down in the 80s. Woo! Finally, let's go to AT&T. AT&T, more downside coming here. AT&T and Verizon. AT&T, I'm looking for support 30.50. Verizon, similar thing here, moved down to about 44.25. Both of these stocks have been absolutely clobbered in spite of their record high. No, they have a really good dividend, and that's really... that's it. How about junk? I talked about this 2 weeks ago with that wonderful picture of Kim Kardashian. Junk in the trunk. And you can see this wonderful candle here. And when people start getting out of junk bonds, it's the cracks in the foundation. We'll see if we can get a bounce here. Even today, starting off the day kind of flat. You would expect with this market rallying here that maybe you'd see a bounce in junk bonds. But if not, and if you pull up just a trend line, I don't even have to do it. Just trend line all the way across, clearly broken. We're in bearish territory. Does not bode well for junk. And finally, S&P 500 ETF, the spiders. Look at this. The pre-market action could get us over the Abenomics trend line. Again, once this breaks, this is very bearish for the market. It broke in October. Once it broke, we continue to see a really nasty sell-off. So if we can't get back over the Abenomics trend line, we are set up for a really nasty pullback. But that doesn't look like it's going to happen today. You can see where we have to get back up to about 202.50. All right, UPOptionMillionaires.com. I'll see you all in the chat room. So like Whole Foods for a pullback. Home Depot, we see if this market can get back over the Abenomics trend line to put new all-time record highs back on Santa Claus's list by the end of the year. See you in the chat room. Goodbye.